Hello, good evening. It's the end of Monday and the start of Tuesday Asian trading on the 22nd, 23rd of September. And we've had our solar eclipse sell off, and what a doozy that was. It really was a pretty nasty shakeout to start the week. One thing I noticed about it was that it was really painful and nasty shakeout in crypto, but it wasn't so much in other risk assets like stock indexes. And in fact, today, although we have stopped falling, we haven't really turned around, whereas stock indexes and quite a lot of big stocks have held up really well. And we've still got now new all-time highs going on in the S&P and the NASDAQ and so on. And it could be, therefore, that we pull up this week. One thing that makes me a little bit less bearish about what happened this week is whenever I see a really strong market move in Asian trading on a Sunday before the US open on a Monday. So whenever we start the week with a really strong move and the US markets are closed, so often it is the high and the low of the week. I'm not sure that that's going to be the case this week, but it very, very often is. And particularly because we didn't see this kind of replicated in other risk assets. So I think we're going to see a little bit of a bounce, and let's talk about why in a lot of markets. So I'm going to start with Bitcoin. I'm going to start with a big weekly chart here. And one of the features of this whole rally, from the lows here, we had 50% retraces all the way from the lows back to 2022. For example, this swing here, we had this wave 2, 3-wave correction, this rally, 5 waves up, and this was, if I measure from this low to high, let's draw in that 50% level. This was an exact 50% retrace, and the low here was at the weekly 50 moving average. If we take a look at this, the rally that we had here from the low in August 2024 to the high that we made in January 2025, this was a lovely 50% retrace, and it was also back to this weekly 50 moving average, and so 50% of this swing and 50 moving average. So if we have topped out here, then, and we do see that bigger fall, we are likely to come back to this 99,000 level, which is 50% of this big swing, and where the weekly 50 moving average is. The problem is, it's not clear to me yet that we have stopped going up for a number of reasons. Because on a smaller scale here, we're coiling up with the same kind of 50% retraces. What do I mean that? By that, let's show you what I mean. From this high to this low here on this weekly chart, I know we closed above it on the daily, but we couldn't close above this 50% retrace from this high to low. And markets in a sideways correction that keep making these 50% moves very often coil up. So you'll see a 50% retrace one way, followed by a 50% retrace the other way. So if we look from the low that we made at the beginning of September, here we are sitting on that exact 50% retrace level. And so these markets tend to keep doing these 50% back, 50% back moves until they break out from this pattern and they break out from this coiling up. So here we are from the beginning of the month low, sitting at a 50% retrace, and I think that the most likely pattern here is that we bounce as long as we don't have a close below 112,600. Here on the daily, you can see this is exactly where we've pulled back to. So if we apply this here, I'm looking for a lower time frame bottom, and I think that we bounce back to 115 or 114,890 is 50% from this high to low. I'm looking at the Bitcoin index chart, which is, volumated around the prices around the exchanges. That would also bring us back to the daily moving averages here. So if we kept doing this pattern until we break out, we could rally 50%, and then we'd be looking for 50%, and then we need to see which way we're going to break out. But for me, as long as we hold this 50% back level, we could keep going higher here. And I'm not saying that this party's over. Now, obviously, if we do break lower, we could see a bigger ABC swing back to this swing low, back to 50% of the rally from April where everything bottomed, back to this weekly 50 moving average, and back to just underneath this round number 100,000 level if we continue low, but it's just not clear to me. And so this is kind of really pivotal, and we really have kind of coiled up, and whenever you can see how all our moving averages are bunched up and flat here, I think therefore it's a little bit of a possibility. It's also a possibility that we continue low, but we don't do that full equal measured move, 50% back. We could just come back to this daily 200 moving average and continue higher. But the daily 200 moving average is, you know, first time back, usually you do see a decent bounce. And I think if we got down here, I'd be more likely to think that we continue, unfortunately, and do that 100,000 thing. So we are in a little bit of sideways indecision, and I kind of don't like diddling in the middle, but I am not ruling out that we don't continue higher here and we see another leg higher. And if we draw this as a parallel channel, we connect the highs from March 2024 and December 2024 and the lows from July and April of this year, we could very, you know, we are really right in the middle of this channel, and we could very easily do another leg higher. You know, the top of the channel, if we go straight up here from here, puts us back, you know, in the 134s, mid kind of mid range of the 130,000s, 140,000. So the party's not necessarily over yet. It does at the moment look like a lower high, but that doesn't mean that we are going to continue lower and break this support and go all the way back to the bottom of the channel. We could mess around here in the middle. So this week is kind of really key, and I would not be surprised at all to see a bounce from here. So when I look at so many other crypto charts, I also see us at a really important support level in so many of them. I don't want to write it off. So if we take a look here on a lower time frame, let's this 4 hour, you can see this looks like a very nice 3 waves back. If we take just this simple swing here, we got 50% back. Here we are sideways at our 50% level. So it is a pretty big level, and if we look left, it's pretty important, this level that we are at, 112,000. It's the highs from May, it's the low that we made when we had that really sharp pullback at the beginning of August before we rallied after this lovely big 3-wave correction here. So in terms of support and resistance, fib retraces, moving averages, this level here where we are has got it all. And so what does a lower time frame reversal look like for me? Well, and as you know, I'm a big fan of moving averages, and I'm looking at us making a little base here. It looks like a little lower time frame double bottom. If we break the high in the middle and we flip these moving averages, I think Bitcoin is lined up for a rally back to 115 at least. And then if we see what happens there, we could see from 115 a bigger pullback before we go higher. So when you're not sure like this, and we're in the middle, and I don't like diddling in the middle, you know, you don't have to pile into a big position. You can start building a smaller position, wait and see if we go up to 115 and then make that a higher low and maybe add to it that way. It's not okay, it's because it's so unsure where we are at the moment, and it could really go either way. I would say be careful with your risk, and certainly be careful with leverage until it's clear that we have not bottomed and we are going up again. Now, one of the things that looked really nasty to me was this, ETH Bitcoin chart on the daily, looks like we've lost this daily 50 moving average, but we are holding this previous low. One thing, it's not clear yet that we have completed this correction, and I don't like stuff underneath the daily 50. If ETH bounces here, I'd like to see us regain that and get back above it again to be going up. It's not a never. You can see when we had this correction all the way back in June, we made a lovely three-wave correction. We got underneath this daily 50 moving average and we struggled until we got back above it again. But once we did, we saw a really epic move. And so ETH against Bitcoin, I think you can hold back and be a little bit careful until you see this recover. You know, we had some MicroStrategy buying in this pullback as well. We've seen a lot of buying of other assets as well. I do think that whales are diversifying out of Bitcoin, and I'm still quite a fan of ETH. And so let's talk about ETH dollar and why this is a really big deal level. So let's take everything off and we'll start again about why. First off, in any uptrend, when you pull back to this previous low, this is always kind of key support, and this previous low here at 4,000, just above 4,000 in ETH, is really important because it's really important support and resistance. If we go back, it was the highs in December 2024, this previous double top level. It was the low when we had the shakeout in August, and it was the highs in March 2024. So big deal double top level. This is a really big deal support level, and we bounced really strongly from it before, and so far today we're bouncing from it again pretty strongly. It also looks to me like a very nice three-wave correction. Are they equal legs, or is there room for us to go a little bit lower and scare everybody? And I have to say that there's room for us to go a little bit lower to this round number 4,000 to be equal and scare everybody. But in terms of fibs, this is a pretty, not only is this an amazing support and resistance level, let's look at this on the weekly and you can see why this is an amazing level. But if I put my Fibonacci retrace levels on from the low on April, when pretty much everything bottomed, we put in this key 236 fib, which for me is my touchstone. It's my touchstone fib level. You can see that we're right here, 4,113. So as long as we don't have a close underneath that level, this is really important support. And so potentially I'm looking for a bottom here. The problem is that sometimes when you make a bottom, it takes a little bit of a time. Like when we made a bottom here in April, we bounced off it the first time and then we retested it and then we went sideways and everybody's not sure, and is it really going to go up, and sideways for a week, and before we kind of found our momentum and we go up again. So we could see the same this week, but I do think that this is a really good level and a good place for all of these reasons to look for a bounce. And so how would we know if we're going up from here? Well, if we put our fibs the other way and we look at where this in ETH, where this 236 fib is over, when you have what you think is a three-wave correction, you put your fib retrace levels over both swings. And if we do that here, we can see these previous lows tell me that if we get back above 4,258 in ETH US dollar, then we are likely to go back at least to the middle of the range and test these daily moving averages. And the most common retrace of an equal measured move pattern like this is a 786, which would put us back at the highs here at 4,700. And you can expect a wobble in the middle at this 50% level, which you can see is pretty tough support and resistance, this high here, these highs and lows. So you could expect a wobble in the middle around 4,500. So this is going to be the level that you want to see ETH get above to see that bigger bounce here this week. Different pattern, and if we get all the way up here, then I think we could go back to outperforming Bitcoin again. So that's where we are. I haven't quite got it on there correctly. So that's what I'm looking for in ETH. Again, if we go down to low time frame moving averages like these 15-minute, it kind of looks like we are trying to make a little bit of a bottom. We have flipped our moving averages here. I would not be surprised at all to see a bigger bounce in here from ETH, and that's what we are looking for. Solana. Let's talk about Solana because I haven't always been terribly bullish Solana. I am a little bit concerned. However, it's outperformed and the Solana ETF is helping. And let's talk about fib retrace levels in Solana because we're not at new highs. We didn't make new highs in Solana. And if I measure from the January high to the April, actually it was March, I think, in Solana, wasn't it, where we bottomed like this. When I draw my fibs, as I said before, you know, when I put them on like this, I look for the 236 fib to be recognized as support and resistance. And if it does, then I kind of rely on them. And so it was. And then this 50%, it was a little bit messy in the middle. It was a resistance. And we got all the way up to this 61, to this 786 fib level. And the key thing about fib levels is they're a little bit like a ladder. When you get above one, you expect it to be support. So for example here, when we got knocked back at this 61.8 level, this 50% level became support for us to keep going higher. So we've got reversed at this 786 fib level at 252. And so the key support now becomes this 61.8, then resistance becomes support. So we need to kind of hold 218 in Solana to be still going up, because if we don't, we're going to do the bigger fib pattern correction, which the rule here is if you reverse at a 786 fib and you get underneath the 61.8, your target is back to the 38.2, which would not be weird at all. It would be back to a third touch of this trend line all the way from this low. It would be back to the daily 200 moving average and back to 171.50. So then we've got, like, if Bitcoin is going to do the bigger short, if ETH is, then this would be the bigger pullback in Solana. Otherwise, if we hold the level, we're still going higher. And so a big inflection decision level at 218 here in Solana. And it may be, you know, we just do a shallow bounce and we come back and retest this level and it doesn't hold and we continue lower. But for now, because first time back to this big level, like all of these markets, it's one of those levels where we're going to try a bounce and see what happens. So if we, again, we could, on lower time frames, this is an hourly, we can put our fibs on from this high. Say if we get above this 236 fib level, if we can hold above 223, we're going to see a bigger bounce to the middle, 238 and likely 245. Those would be the two levels. And then potentially back to test the top of the range and keep going. So that's where we are. Another big support level in Solana then. Let's take a look at a few more. So this is Fetch.ai. This one, if we go back to April of this year, had a really lovely big strong bounce off the lows, and since then, since we topped out in May in this one, it looks to me like we've made a big choppy overlapping correction. And here on these daily moving averages, we're all bunched up. As I said before, potentially this is one of those ABC corrections where this second swing is only 61.8 of the first one, and if we break down from this wedge here, we continue lower in Fetch.ai and we to the equal measured move level all the way down here at 0.449. I think it is. There we go. Just make sure I've drawn it properly. So we need to watch out. So this, though, is a third touch of this trend line, and as I say very often, third touches of horizontal levels and third touches of trend lines are very often false breakdowns, and then you initially hold within the pattern or the trend line, and that's what we're seeing here. So this is one of those third touch false breakdowns, and actually we could call it a kind of a little double bottom swing failure pattern at this low. So potentially this is really the key which Fetch needs to hold, and we could very easily bounce back to the top of this consolidation pattern that we have been in Fetch. And if we don't, and we continue and we break down, we continue lower, of course, to that 0.44 in a bigger correction. I don't know which way we go, but this holding this low is normally, I would expect, an attempt at a bounce, and then we see if we go higher here. So this is another one where we could look at it on lower time frames, like the hourly, and you can see after this really horrible shakeout that we had to start the week, potentially we've done a big three-wave correction here. We'll go all the way from this high then on the hourly, and we can say that 236 fib here is pretty much close to where we're testing it. In Fetch above 0.600, we're on our way up, and we're likely back to the middle at 0.65, and we'll see what happens there. But a bigger move underway than in Fetch.ai. So a really interesting support in Fetch as well. Let's take a look at Ripple, which of course has been really exciting with the ETF and everything that's going on. And this is another one that's tested the bottom of the range, and in Ripple got bought up pretty sharply. Now I would expect normally if we'd have broken this double bottom, we were going to do we could still do a bigger three-wave correction here. So this first swing and this equal measured move equal, and we come all the way down here to this 200 moving average. But I think people saw this retest of this level as somewhere where they wanted to get in, and they did. So it's holding for now. Is it going to continue higher from here? Again, if we measure from the high last week, here it's possible, you know, that we're doing a 5 waves to finish, and this is just going to be shallow and we continue lower. But I have to say, I think that we could see a bigger bounce here, just because for me, Ripple immediately got back above this 236 fib level, and now it's support. And so I do think we'll come back to the middle of this range, which puts us back in Ripple around 3.0, and then we'll see where we go from there. So a bigger bounce from Ripple and a pretty decent bounce off this low. Back to 3.0 in the middle just means back to the moving averages, unfortunately, which are getting all bunched up. And if we look at our daily moving averages, that's where they are here. We need to hold above 3.0, which is exactly where this daily 50 is. And then I think we'll push higher, and this time potentially we could get a breakout from this, and it would look then like a really strong bullish pennant. We need to watch out we don't just bounce up here and then continue low, and we do that bigger move in Ripple. Okay, lots of talk about AVAX, and I have to say I really like this chart. Now, there's lots of talk about AVAX. Obviously, there's treasury company. A lot of companies are moving into these bigger utility coins. They will become ETFs, and there are, I think Agriforce has rebranded as an AVAX treasury company. Anthony Scaramucci, who you might know, is behind it. He's a big crypto advocate, not so much an advocate of Trump. Anyway, why do I like this? Because we had a really strong move off the September 2023. So this is a weekly chart. This was a really strong move. We could argue this was just 3 waves, but what we have done is a textbook, really nice 3-wave correction here, and we are back holding above this 200 moving average. I've said before, when you have a big 3-wave choppy overlapping correction like this, you put your fib retrace levels over both swings, and you trade level to level to level. And this one validated the 236 fib here, really textbook beautifully. So we can stay really bullish in AVAX as long as we hold above 26. And here we are at the 38.2 fib. I have to say, I think we continue higher to 45 in this one, but we need to hold above 34, and this is a little bit of a resistance level. And again, it may be that we just retest this level and still do another swing lower. We didn't pull back to this previous swing low exactly. But this looks really strong, I have to say, on this AgriForce level new. So do you want to buy it here after it's made a big swing like this? I think if we can hold above here and we hold above 34, that will be your trigger to buy. Then we'll go fib level to fib level. My target is 46 because it's this trend line, but we could see a wobble around 40, which is the 50%. But this one looks set to go much higher. AVAX looking for a break above the resistance at 34 in that one and holding above it. Watch out if we can't get above it. We could see a bigger pullback before we do it and a bigger three-wave correction. So let's talk about NEAR. I've been talking about NEAR for a while. Again, if we look at this on the daily or a weekly, you can see from the highs in March 2024, this is a textbook equal, very good looking three-wave correction in this one. And I really like how we've been going sideways since April, building a base. We have gotten above all of our daily moving averages. We pull back to the daily 20 in this previous high in the shakeout and bounced really nicely from this 20%. Now I had drawn this as a kind of a wedge, if you like. One reason is we had a textbook third touch false breakout, and then we had our fourth touch, and then we broke out for real, and now we've back tested it. Whenever you break out from a consolidation like this, it's always a little bit of a risk area, you know, the previous highs, you know, otherwise you're just range trading. So your first target is always this previous high in the middle, especially after a double bottom. But if we break above that, because we've got this double bottom, our target in NEAR should be twice this distance, right? Which puts us all the way up here at 4.9 anyway. And here we are, of course, at 2.9. So holding the moving averages, got to watch out for this tricky level in the middle at 3.3. But I think setting up potentially. We put our fibs on this whole correction. We've broken above this 236 fib level. And so for me, this is a buy pullback market on whatever time frame you're trading. If you Heikin-Ashi candles make it really easy. Wait for some red, especially if it makes nice three waves, and buy it when it goes green again, because we're in an uptrend, especially if we start breaking out and making new highs, and then more and more people will notice. So I'm a big fan of NEAR. To retest the highs at 3.4 and potentially all the way up to 4.9 or 5 if we can break out from this sideways range. And the main reason for that is because we've got this really big three-wave equal measured move from the highs in 2024, March 2024. If I put my fib, we'll play the game and put my fibs on from this high to this low. When you have an equal measured move like this, choppy overlapping correction, you put your fibs over both swings, and so you can see 3.4, 3.5 is this important 236 fib level. That's what is going to be the tricky one in these previous lows. So actually, this resistance potentially is slightly higher than here. So a false breakout above these highs would fail at 3.5. We need to watch out for that. I think it'll stall there initially, but I'd really like to see it smash through it in NEAR. So what about some smaller stuff or some more SMEME stuff? We've all looked at a lot of utility and bigger assets. Not everything looks terrible. Let's take a look at WIF. So WIF is another one where I would say we're coiling up. So from this high, we could say like this, and we're right in the middle, aren't we? Well, what we are doing is we're holding the 200-day moving average. It was resistance when we tried it in May of this year, and it was resistance again when we tried in July, and then when we got above it, we saw a really strong move. And then when we came back and tested it for support on the 1st of September, what did we get? We got a really nice double bottom swing failure pattern here, and this shakeout has brought us back to retest it. Are we going to find support here and continue higher? Because if we don't, quite often you draw what looks like triangles or wedges where it looks like it's coiling up, and they can become bigger three-wave corrections. So this 200 moving average in this level here is important if we measure the swings. So from this high to this low, here we are kind of sideways at this 61.8 level, and this equal measured move is down here at 0.56. So if we lose the 200 moving average, or if we can't get back above 0.85, there is a risk. And you can see this 0.85 level, 61.8 level. First time it was support. Now we're doing that thing where we wash back and forward through it. So, I've talked about this before when you have a big level. So first time you expect resistance, and then sometimes you see back and forth. And the time to buy it is when it becomes support. And that works the other way when you're going down. You can test it, then you might go back and forward through it. And then when it becomes resistance, that's your sell, okay? So we need to make sure we've done this pattern here with DogWifHat. Here's the low. Here we've done the washing back and forward. If this now becomes resistance, it's possible that we still continue lower down here. So we need to watch out for that at 0.85. So if we attempt a bounce again from this lovely 200-day moving average in WIF, 0.85 is the level we need to push through and get above. And again, this is another one where we've had the really nasty shakeout. This one really isn't bouncing as hard as some of the others. The meme coins often are last. But there's a few things I like about this. So apart from the big 200-day moving average, I like the kind of equal swing here. So if we can get back above that, potentially, I like this. There's a few things. We've stopped going down. We're not going up yet. But because of that bigger pattern, I think that there is a chance that we could try it again. And this would then just be a bigger three-wave correction. So a lot of stuff is in the middle. Not all memes look as quite as hard hit as this one. But BertramThePomeranian, I'm a big fan of. I'm quite a big fan of coins related to animal rescue and animal help, and that's this one, and it has a really good community. But I really like this chart, and this one's been a long time building. If we look at this on the daily, look at this lovely head and shoulders pattern that we built over the space of this whole year, and the neckline resistance has become support, and here we are bottoming from it. This also looks like a textbook three-wave correction, little bull fag retest of it. So bunched up daily moving averages, we've just pushed above them again. I would expect another swing high. Now if this is just going to be a bigger correction, sometimes you look for three-wave corrections, and what you'll just see is three waves going the other way, and it'll turn into a bigger three-wave correction. And I think if we get a broader crypto sell-off, but it might be a little vulnerable to that, because high tide floats all the boats and they're not invulnerable. But if we do get a bigger bullish move, this one, because of this chart, is performing so much better than the others. I think it's got a really nice swing setting up. So and pushing back above these daily moving averages when everything else looks so grim is pretty good. So the fail would be if this becomes just a little equal measured move and we do kind of one of those third touch kind of false breakouts, retest 0.077 and can't continue. So this previous target we had at 0.77 is our kind of bull bear line, and above it we continue if we can get above 0.777, our target next is 0.1 and then 0.122 next up here for BERT. But this one is definitely outperforming and looking really good. So let's talk about a super popular HyperLiquid. We look at this on the week. You know, I'm a really big fan of BNB as well, but I think that may have a little bit further to fall. So let's take the Heikin-Ashi off and talk about the level that I'm watching in HyperLiquid. If we go all the way back to the low in this one, which was in April when everything else had a bottom, this 236 fib becomes important. It's at 47.80. And this is a weekly. If we look at it on the daily, that's where we pull back to. So we pull back to the daily 50 moving average. Does Hype care about the daily 50 moving average? Heck yeah. In June, it was really important support. And again, we tested it in July and it was really important trend support. So HyperLiquid does care about the daily 50 moving average and this 236 fib. If we can get a daily close and hold above 47.80, then this is just a nasty pullback in an uptrend to pretty important support, and we can look for another push higher. If we break underneath here, unfortunately, I think that we are at a little bit of a risk of a bigger pullback in this one. Now, we could also say, if we draw a trend line all the way back to the lows that we made on the 7th of April, we tested this trend line on the 2nd of August, and here we are doing a third touch, potentially nasty little shakeout false breakdown of this level. So if this breaks down, I'm afraid we're a little bit vulnerable to a retest of these lows, a 50% retrace, and a pullback to the daily 200 moving average. By the time we get down here, that'll probably meet at 34.52. So I'm watching to see if this will hold. There's a few reasons to like this level. That's all of them. I don't know if we're going to do it again. Let's see. So if you enjoyed this video, you can get daily updates and chart requests and chart help. I am at themacrotrader.com. And there is as you know, I've explained many times why I think it's really important as regulation gets worse and worse and worse in crypto, that it's not the market we thought it is with all the KYC. KYC basically means taxation. In the United Kingdom, from the end of this year, they're going to be using AI to trace wallets, and centralized exchanges where you've done KYC will report your trades in real time to tax authorities. And if they're doing that in the UK, they're doing it in Canada and Australia and America and everywhere else. I think I think it's quite important to have an exchange with no KYC, where if you want to do some fun trading, that you can do that without reporting it. And this video is sponsored by Bitfinex. I'm really grateful to them. They are a no KYC exchange. You can withdraw up to $1 million a day without KYC from there, and you can have a little bit more privacy that way. I think whenever you link a wallet, even if you just think, oh, I have all my wallet, I have all my crypto, you know, in my ledger, and as soon as you send money from there to a centralized exchange where you've done KYC, that is linked to you. So everything in it is linked to you for taxation purposes. So if you have a no KYC account, then you kind of need to use an interim wallet and create a new one each time at somewhere like MetaMask or, you know, Phantom. And that way you keep your trading private. So I'm really grateful to Bitfinex. Try them out. You might like them. They have pretty good deals. And yeah, that's it for this week. Let me know if there's anything you'd like me to look at. I'm going to look at tech stocks because I think quite a lot of them have been in a really interesting wave 4 and they have more upside, which keeps me feeling pretty positive for crypto, and that this is not, the high. I think if we break down, I probably wouldn't be too upset if Bitcoin broke down because or just went sideways into year end, because I think we kind of need an alt season, especially for the bigger alts. But if ETH kind of, let's see, I lean towards us staying bullish, but I'm open to it being either way. This really is a pretty important decision level, and I don't know. Anyone who tells you they know, they don't know. We are at a pivot level, and we could go either way from here into the end of the year. Okay, I will also make a video about stablecoins and what I think the US government is up to with its debt and what's going on with them. Let me know if you have any questions. Good luck.